revaluing gold could be a way to bring the economy back from kind of a bad recession, and that's been done before. President Trump could do that if the economy falls off a cliff. Instead of asking the Fed to do QE and the government indebting itself even more, they would have a windfall. Let's say at $4,200, it would be $1 trillion windfall. Isn't that much, right? But if they revalued gold to 20,000, that would be a $5 trillion windfall, and with no QE needed. That's one way to look at the gold revaluation. That's why I think gold revaluation could be very close.
Chaos is creeping in from multiple corners of the U.S. economy, and Mario Innecco says the government shutdown is only accelerating the cracks. Domestic air travel has already taken a hit, with hundreds of flights canceled as key agencies run out of funds to pay essential workers like air traffic controllers. What began as political theater is now bleeding into everyday life. In the financial system, he says the signs are even more serious. The credit market is tightening fast. Several shadow banking firms have suddenly gone under, and commercial real estate continues to buckle under the weight of higher rates and empty offices. Bank reserves have fallen to dangerously low levels, leaving the system fragile just when liquidity is vanishing. Even the Senate's attempt at compromise, Democrats proposing to extend benefit payments for a year to appease Republicans, collapsed, sending markets into the weekend with zero clarity. If this stalemate drags on, Innecco warns the damage could ripple far beyond Washington. A stock market drop would hit consumer confidence hard and expose how dependent the strong economy really is on inflated asset prices. Trump keeps boasting about growth driven by AI and massive data centers, but those industries lift GDP on paper without improving life for most Americans. This is where Innecco draws his final point. In moments like this, when politics fail, liquidity dries up, and public trust fades, governments often return to their ultimate reserve of credibility, gold. A revaluation of the metal, he says, could soon become the tool of last resort to stabilize a system running out of options. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
In January, we found out that a lot of physical gold was flowing back to the U.S. over, I think, 400 tons, and it could have been more. And a lot of people speculate that and it started in December, and people speculate that with Trump coming into power, that he would have to bring the gold back to do an audit of Fort Knox, and then revalue the gold, and that's highly possible. I think there's still a lot of gold flowing into the U.S. Whether there's 8,133.5 metric tons, or about 261 million troy ounces in the Treasury vaults, it is questionable, but I think it's something people will I think they'll do it, though. Even Judy Shelton, who I've had on the channel, who's written a book, Good as Gold, which I've also talked about here, in which she says they should start issuing treasury bonds backed by gold that could be redeemable at maturity by gold, and that would have like a call option on the price of gold. So it would kind of put a straitjacket, hopefully, on government spending. She thinks that we need an audit, and she thinks revaluation would be a good thing. So why did I say I think revaluation is closer than most people might think? Well, I think there's a few things hanging over the economy, the financial system, the government shutdown. I saw that it's now affecting internal domestic flights in the U.S. It could affect international flights as well, because the federal agencies don't have the money to pay for the flight controls, or the people who do all the controls for the flights. And I heard that hundreds of flights are being canceled. That's going to affect everything. And the federal government, of course, funds a lot of programs in all aspects and sectors of the economy. That's draining liquidity from everything, less people getting paid. And that's why I think the stock market is wobbly a little bit. And we've also seen a problem in the credit market with the shadow banking companies that have collapsed out of the blue, like First Brands, what's the other one, Tricolor, and there could be many others. And commercial real estate is still not out of the woods. We've seen that banking reserves are dropping to very low levels, mainly because of this liquidity and the government shutdown. But I saw that the Senate, the Democrats, offered a deal to stop the shutdown. I think it was to extend benefit payments or something that Trump, the Republicans, wanted to cut for a year, and the Republicans rejected that. So it will be interesting to see what happens on Monday when the markets reopen, because I think the rally at the end of the day yesterday was because people thought there would be a deal, but it doesn't look like there is, or maybe there is. You can comment below. And so back to gold revaluation. Yeah, that could really damage the economy. The stock market crashing, the economy is running on the stock market. Even President Trump said that the economy is also booming because of AI, all the AI data centers. That, how does that help the bottom 50? They don't really work in these data centers. And AI is contributed to more than half of GDP growth recently in the U.S. in the second quarter, I think.
Mario Innecco says if the stock market takes a major hit, a gold revaluation could easily become the government's emergency lever to restore confidence. It wouldn't be the first time. In 1934, President Roosevelt revalued gold from $20.67 to $35 per ounce after forcing citizens to turn in their gold. That drastic step handed the government a huge financial boost, helping to fund New Deal programs during the Great Depression. The mechanics of it raising the dollar value of gold to strengthen the government's balance sheet still apply today. In today's terms, Innecco explains the math is even more powerful. Setting an official gold price at $4,200 could create roughly $1 trillion in new value for the Treasury. A more aggressive move to $20,000 could unlock about $5 trillion, enough to stabilize the system without printing a single new dollar or expanding the national debt. He says given the current environment, rising layoffs, a fragile credit market, and mounting political chaos, such a revaluation might not just be possible but practical. Adjusting the gold price to reflect reality even to around $4,000 an ounce would instantly transform the government's balance sheet and could be the reset button policymakers reach for when all else fails. Let's get back to the interview.
It's an economy that even Jay Powell, in his latest FOMC press conference, noted that there's two economies, one at the top where people are benefiting from AI and asset price inflation, and the other one where the bottom 50 are suffering, that they're having the cost of living going up. And I think that's why that guy in New York won that election, the mayoral election. I'm not saying I agree with him. I don't really know much about him, but I've seen a lot of bad stuff, and it's probably true. But he focused on, people having a tough time coping. So, yes, if that were to happen, the stock market, big correction in the stock market, revaluing gold could be a way to bring the economy back from kind of a bad recession, and that's been done before. It was done back in 1933-34 by Roosevelt in the depths of the Great Depression. He, of course, did it a bit differently because back then gold was part of the monetary system, so he had to kind of force people, like gold confiscation. bring in all the gold and make it illegal. And then in 1934, he revalued it from $20.67 to $35. And that windfall was used for all the government spending and the New Deal. Yeah, of course, I don't believe in that government intervention. That's Keynesian and even socialist. And it's ironic, isn't it, that President Trump could do that if the economy falls off a cliff, instead of asking the Fed to do QE and the government indebting itself even more. They would have a windfall, let's say at $4,200, it would be $1 trillion windfall. Isn't that much, right? But if they revalued gold to 20,000, that would be a 5 trillion windfall, and with no QE needed. That's one way to look at the gold revaluation. The other thing that could happen, and one of my friends told me this recently, is that the Supreme Court is going to make a ruling. I don't know when it is, but it could be any time. That the tariffs are unconstitutional, and that would put the cats amongst the pigeons. It would lead to a massive, correction in the stock market as well. It would lead to the Treasury having to reimburse hundreds of billions in tariffs that importers have paid. It would, ruin Trump's program. The deficit would rise. So, gold revaluation would be like the only thing left for him to do. And some people might say, "Oh, this is you gold bugs talking about this," but and that you're wishing this, and that's never going to happen. But it's happened 4 times in history. 1835, Andrew Jackson revalued gold from $19.39 to $20.69. 1934, President Roosevelt revalued from $20.67 to $35, and in 72, President Nixon revalued from $35 to $38, and then the year after, he revalued it from $38 to $42.22, which is where we are right now, and that's only worth $11.1 billion. So 100 times that to 4,000 would be, of course, 1.01 trillion. So that's why I think gold revaluation could be very close.
What's unfolding now feels less like a temporary budget standoff and more like a slow-motion test of faith in America's financial foundation. Markets can tolerate high interest rates or political bickering for a while, but when trust in the system itself starts to wobble, everything from credit to currency becomes unstable. The US has reached that edge before, and each time it's found a way to reprice reality. The idea of officially revaluing gold might sound radical, but it's just history repeating in a modern context. When paper confidence evaporates, tangible value becomes the anchor. The longer Washington drags its feet, the more appealing that anchor looks, not as a return to the past but as a forced correction to decades of excess. It wouldn't fix everything overnight, but it would restore something markets crave more than stimulus or spending credibility. Gold once again could become the yardstick against which everything else is measured. If the next financial reset is triggered not by collapse but by deliberate revaluation, would it mark the start of a more honest monetary era or the final admission that faith in fiat money has run its course? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.